they're going to decrease the size of the balance sheet based on the appetite for their liabilities. So that's the same exact thing, that they're going to be very measured, they're going to be very careful. I just don't think this is quite as unusual as most people think. This is kind of a normal late cycle dilemma for the Federal Reserve. Do they raise rates? Do they not raise rates? You know, what's the stance of monetary policy in a late cycle environment? We look back in history and it looks so obvious. Why didn't they do it? I think the deliberations and the terminology he's using fits very well with history and the dilemma that the Federal Reserve always faces in a late cycle environment.
You know, Vince, there are a couple of things that occur to me. He said today that he wanted the balance sheet to move toward a more normal level, which I think he stipulated would be smaller than it is now, but larger than it was at the beginning of quantitative easing. So a more normal level. And the Fed seems to be on a quest for, quote, a neutral interest rate. These are hard to define terms. What's normal? What's neutral?
Which basically means is they'll keep doing what they'll do until they stop, and they'll hope they'll be right. With regard to the balance sheet, the important message was actually sent yesterday with the minutes. The FOMC had a long discussion of policy renormalization, and what they did say was that they were going to stop with a bigger balance sheet than their 2012 renormalization plan. That was the real message, rather than Chair Powell's nebulous, ambiguous phrase of substantial.
Yeah, but Vince, why wasn't that the message from the chairman today? I agree with you that the minutes were interesting and kind of dovish when it came to the balance sheet. Plus, I don't think the market and the Fed are probably that far off on where that endpoint is, but he says this word substantially smaller, almost like he's not prepared to answer the question, to be, I guess, as critical as you can.
Well, I think what they have decided with regard to the balance sheet is they do not want to own mortgage-backed securities.
Right.
They also don't want to do anything complicated in terms of changing the program or signaling that they are treating MBS and the runoff differently than Treasury securities. So what do? You keep with the cap. You wind up with a substantially smaller holdings of MBS, but still a relatively big balance sheet.
Yes.
The interesting thing about the minutes yesterday is they raised the possibility of actually buying securities in the secondary market as they were redeeming them in the primary market.